Ethereum Classic represents one of blockchain's most controversial origin stories, a digital currency born from one of cryptocurrency's biggest hacks and a philosophical divide that split an entire community. With a current price around $19 and a market cap exceeding $2.8 billion, Ethereum Classic ranks as a significant cryptocurrency despite a turbulent history marked by security breaches, philosophical debates, and diminishing relevance. This is the story of how a bold experiment in decentralized governance created two competing blockchains, and why one became a blockchain giant while the other struggles for survival. In spring 2016, Ethereum was only 1 year old, but already making waves in the blockchain world. That's when the DAO, a decentralized autonomous organization, launched what would become one of the largest crowdfunding campaigns in crypto history, raising an unprecedented $150 million in Ether from investors worldwide. The DAO promised a revolutionary investor-led capital fund where members could vote on venture projects proposed by Ethereum-based startups, with transactions and settlements executed autonomously through smart contracts. However, disaster struck on June 17, 2016. An attacker exploited a vulnerability in the DAO's code, specifically a recursive call flaw that multiple security researchers had warned about days earlier, and drained approximately 3.6 million Ether, worth around $50 to $60 million at the time. This represented nearly 1/3 of the 11.5 million Ether that had been committed to the DAO. The funds were moved into an account with a 28-day holding period, creating a ticking clock for the Ethereum community to respond. The Ethereum community faced an existential crisis. The attacker, or someone posing as them, published an open letter claiming the funds were obtained legally, according to the rules set out in the smart contract. Some argued the attack was unethical, but technically valid since it didn't violate DAO rules as coded, embodying the code is law principle that many blockchain enthusiasts held sacred. After intense debate in public forums, Ethereum founder Vitalik Buterin proposed a hard fork that would effectively roll back the blockchain's history to before the DAO attack and reallocate the stolen funds to a recovery address where investors could withdraw them. This solution was extremely controversial. After all, blockchains are supposed to be immutable and censorship-resistant. On July 20, 2016, at block 192,000, the Ethereum hard fork was implemented after miners, exchanges, and node operators agreed to update their software. However, not everyone accepted this decision. A portion of the community believed that reversing transactions violated the fundamental principles of blockchain immutability and set a dangerous precedent for future interventions. These believers continued using the original, unforked Ethereum blockchain, which was rebranded as Ethereum Classic. The new chain that rolled back the hack retained the name Ethereum. Ethereum Classic launched in July 2016 with an initial price of approximately 84 cents, and by December 2016, exchanges like Kraken and Poloniex had delisted DAO trading pairs as the original project shut down. Ethereum Classic positioned itself as the true continuation of the original Ethereum vision, maintaining the code is law principle and refusing to reverse transactions regardless of circumstances. Ethereum Classic experienced impressive growth in its first 2 years. In March 2017, the ETC price increased by over 130% and reached a new high of $3.15. By November 2017, amid the broader cryptocurrency bull market, ETC surged 145% to reach $32, then broke through $40 to hit $42. In January 2018, Ethereum Classic reached its all-time high of $47.77 before dipping back to $28. For context, the best year for Ethereum Classic was 2017, with an average price of $11.93 and closing at $28 after starting the year at just $1.41. This early success demonstrated that there was genuine support for an immutable, proof-of-work smart contract platform that rejected interventionist governance. Ethereum Classic maintained its original proof-of-work consensus mechanism and implemented a fixed monetary policy with a supply capped at approximately 210.7 million ETC. However, Ethereum Classic's commitment to proof-of-work and relatively lower hash rate compared to Ethereum would become its Achilles heel. The first major security incident occurred in January 2019, when Ethereum Classic was hit by a 51% double spending attack that resulted in approximately $1.1 million worth of ETC being fraudulently spent. In a 51% attack, malicious actors gained control of more than 50% of the network's mining power, allowing them to reorganize the blockchain, manipulate transactions, and double spend digital assets. August 2020 became the worst month in Ethereum Classic's history. The network suffered 3 separate 51% attacks within just 1 month, on the 4th anniversary of the 2016 hard fork. These attacks involved deep chain reorganizations. The third attack alone reorganized over 7,000 blocks, representing 2 days' worth of mining. The estimated losses totaled approximately $5.6 million and $1.68 million from centralized exchanges. The Ethereum Classic network had suffered 4 major 51% attacks between 2019 and 2020 in total. The security breaches had severe consequences. Major cryptocurrency exchange OKX announced it would consider delisting ETC due to severe lack of security. Coinbase extended deposit and withdrawal confirmation times for ETC to roughly 2 weeks. Even FTX, which didn't support spot trading of ETC, reconsidered its perpetual futures contracts for the asset. In response, the Ethereum Classic development community implemented the ECIP 1099 Thanos upgrade in November 2020. This upgrade modified the Ethash proof-of-work consensus algorithm to ETC hash, recalibrating the directed acyclic graph by reducing its size and slowing its growth rate by half. The community also adopted MES, modified exponential subjective scoring, to make larger chain reorganizations more difficult. However, concerns remained that MES had not been formally studied and its security had not been proven. Despite these mitigation efforts, Ethereum Classic has struggled to regain relevance. While Ethereum boasts the largest developer ecosystem in cryptocurrency with thousands of active projects, over 3,000 active dApps, and processes billions of dollars in transactions daily, Ethereum Classic has a significantly smaller development community. Recent data shows that Ethereum Classic has only 151 developers contributing over the past year, with minimal recent commit activity on GitHub, 0 commits in the past 4 weeks, compared to an average of just 1 commit. The price reflects this declining momentum. After reaching $129.73 in May 2021, Ethereum Classic's price has steadily declined. In 2024, ETC reached $37.22 during the March bull market, but has since fallen. At the beginning of 2025, Ethereum Classic hit $29, dropped dramatically to $14 in April, and currently trades around $19 to $20. Price predictions for 2025 range widely, with some analysts projecting a maximum of $35 to $68 and others far more bearish. Ethereum Classic's story embodies the philosophical tensions at the heart of blockchain technology, the conflict between ideological purity and practical governance, between immutability and adaptability. While Ethereum evolved into a scalable proof-of-stake platform powering the DeFi and NFT revolutions, Ethereum Classic remained committed to its original principles, but paid the price in security vulnerabilities and declining adoption. Today, Ethereum Classic serves as both a cautionary tale about the challenges facing smaller proof-of-work networks and a testament to the power of conviction in the crypto community. Though diminished, it continues to operate as a platform for developers who prioritize immutability above all else. A reminder that in cryptocurrency, principles sometimes matter more than profit. Thanks for watching.